What if I told you there's a financial giant so big, its collapse could trigger a global economic meltdown? No, it's not a bank or a country. It's the S&P 500. Imagine waking up one morning to the news. Everyone has stopped investing in it. Not just a few people, but everyone. What would actually happen? Let's dive into this wild what-if scenario and explore the chaos that would unfold. First, what even is the S&P 500? Think of it as the ultimate stock market VIP list. It's a collection of 500 of the largest and most influential publicly traded companies in the United States. We're talking about giants like Apple, Microsoft, Amazon, and Tesla. When you hear financial news talking about the market, they're often referring to the S&P 500. It's as a barometer for the health of the entire US economy, and by extension, the global economy. Billions of dollars from individual investors, pension funds, and massive institutions are tied up in it. So picture this, day one, a wave of selling hits the market. Everyone, from your neighbor with a retirement account to the biggest hedge funds in New York, is trying to get out. The first thing that happens is a catastrophic market crash. The value of these 500 companies would plummet. We're not talking about a 10 or 20% drop. We're talking about a near total wipeout. It would be like the 1929 stock market crash and the 2008 financial crisis combined, but on steroids. The immediate effect? Panic. Pure, unadulterated financial panic. Your retirement account, if it's invested in index funds that track the S&P 500, would be decimated overnight. Millions of people planning to retire soon would see their life savings evaporate. The psychological impact alone would be devastating, creating a massive crisis of confidence in the entire financial system. People would rush to pull their money out of everything, not just stocks, fearing it's all a house of cards. This brings us to the companies themselves. The S&P 500 isn't just a number on a screen, it represents real businesses. A company's stock price is crucial. It affects their ability to raise capital, to borrow money, and even to attract and retain talent using stock options. If Apple's stock price drops to near zero, how do they fund their next iPhone? How does a company like Pfizer fund its next life-saving drug research? They can't. Without access to capital from the stock market, these 500 corporate giants would be in deep trouble. They would have to halt expansion plans, slash research and development budgets, and lay off employees. And we're not talking about a few thousand jobs. We're talking about millions of jobs across every sector. From the tech wizards in Silicon Valley to the factory workers in the Midwest, the ripple effects of mass layoffs would be immediate and severe. Unemployment would skyrocket to levels we've never seen before. This leads to a vicious cycle. With millions out of work, consumer spending would grind to a halt. Who's going to buy a new car, a new phone, or even go out to eat when they don't know where their next paycheck is coming from? This collapse in demand would hit all businesses, not just the S&P 500 companies. Small local businesses, from your favorite coffee shop to the corner bookstore, would see their customers disappear. Many would be forced to close down, adding even more people to the unemployment lines. Now let's zoom out to the global picture. The S&P 500 isn't just an American thing. International investors from all over the world hold trillions of dollars in these stocks. Foreign pension funds, sovereign wealth funds, and individual investors would suffer massive losses. This would trigger financial crises in their own countries. Major global banks that are heavily exposed to the US market would be on the brink of collapse. The interconnected nature of our global financial system means that a fire in the US stock market would quickly spread into a global wildfire. Governments and central banks, like the Federal Reserve, would be in full-blown crisis mode. They would try to intervene, of course. The Fed would likely slash interest rates to zero, or even negative, to encourage borrowing and spending. They might launch unprecedented quantitative easing programs, essentially printing money to buy up assets and inject liquidity into the system. The government could pass massive stimulus packages. But would it even work? The problem isn't just a lack of money. It's a complete and total loss of faith. If people believe the system is fundamentally broken, no amount of cheap money will convince them to invest or spend. It would be like trying to fill a bucket with a giant hole in the bottom. The trust that underpins our entire modern economy would be gone. This scenario would also have profound geopolitical consequences. The The US dollar's status as the world's reserve currency is tied to the strength and stability of the US economy. A collapse of this magnitude would shatter that confidence. Countries might start looking for alternatives, leading to a massive shift in global power dynamics. The economic chaos could lead to social unrest and political instability, not just in the US, but around the world. So if everyone stopped investing in the S&P 500, what would replace it? Where would all that money go? Initially, people might hoard cash, stuffing it under their mattresses, figuratively speaking. Some might rush into traditional safe haven assets like gold or other precious metals. We could see a huge bubble in the real estate market as people look for tangible assets. Or maybe cryptocurrencies would have their moment, with investors gambling on a decentralized alternative. However, none of these could easily absorb the trillions of dollars that were previously in the S&P 500. The sheer scale is just too immense. More likely, the economy would enter a deep, prolonged depression. It wouldn't be a quick V-shaped recovery. It would be a long, painful grind, potentially lasting for a decade or more. We'd be looking at a period of economic stagnation and hardship that would make the Great Depression look like a minor hiccup. Rebuilding the trust and the complex financial architecture that was destroyed would be the work of generations. So is this scenario actually possible? Realistically, no. It's a thought experiment. For everyone to simultaneously decide to stop investing, there would need to be a collective, coordinated action of a scale never before seen in human history. The S&P 500 is too deeply embedded in our financial ecosystem. Pension funds are legally obligated to seek returns for their members. Investment managers are paid to manage money, not to sit on cash forever. And fundamentally, people invest to grow their wealth and secure their future. But what this thought experiment really shows us is the incredible importance of collective belief in our financial systems. The value of a stock, a currency, or an entire market is based on our shared confidence in its future. The S&P 500 isn't just a list of companies, it's a symbol of that confidence. It represents a belief in innovation, growth, and the future prosperity of the American and global economy. If that belief were to ever truly vanish, the consequences would be more catastrophic than any of us can truly imagine. It's a stark reminder that the world of finance, with all its complex charts and algorithms, is ultimately built on a very human foundation: trust. Thanks so much for watching. If you found this journey into financial what-ifs interesting, make sure to hit that like button and subscribe for more content. Let me know in the comments what other crazy economic scenarios you'd like me to explore. See you in the next one.